I think we should be just about setting up here. If you can hear us, give us a little thumbs up here. Jason and Andrew here coming at you, 7:45 a.m. Central Time on Friday, May 26th, the Friday right before Memorial Day weekend. I don't know if you know about that, Andrew, but Memorial Day weekend here in the U.S. is a pretty big deal. Monday, all the businesses, banks are closed on Monday. Got a long weekend. Yeah, it looks like they can hear us. Mm-hmm. Mm. I didn't put my stream up on Monday. I'm not going into the office. I don't have the stream up yet, so I'm sort of seeing what everybody else is doing. It's tough in the Forex world, isn't it? Because it's so the holidays are so different across the country. Some that I've never heard of are a huge deal in certain countries. So, sort of fun. Oh, I got to click that button, don't I? Okay, give it a test now, Andrew.
Okay, can you hear me now?
Yeah, that's my end. I did it last week on you too. I didn't click the Skype audio button. There we go.
All right. Okay. Well, no. Okay, that's good. You can hear me now. No, basically, I was saying, yeah. I mean, UK has a holiday this Monday as well.
Mm-hmm.
So the UK and the US both have times away from the screens. I was putting out feelers this morning, basically saying, are people going to be trading? I know Aussie, Australia and Europe are open, but just putting your feeling out to see if people are going to be listening in. If not, I'll be streaming to myself.
Mm-hmm.
So I'll play that one by ear, like you say. But yeah, it's going to be pretty quiet either way.
Mm-hmm. Yeah, no doubt about it. No doubt about it. Before the stream started, hey, how you guys all doing? Nice to see everybody here in the room. Before the stream started, Andrew and I were having a little chat, and I was talking about the short on the Euro Yen and how I have a large trade on my own side account there, just watching that go. And I put a little link that was talking about the yens being driven lower due to the treasury yields. And interesting stuff going on in the Japanese yen. It says here, analysts cited a fall in the U.S. Treasury yield since Federal Reserve minutes on Wednesday prompted questions over pace and extent of interest rate hikes. What do you think about the U.S. dollar and the rate hikes? I didn't watch your last couple streams, Andrew, because I was sleeping, of course. Did you cover any of that stuff in the streams with the DXY?
Yeah, well, I came online for the FOMC itself.
Yeah, that was cool. I didn't see that one, but that's awesome. I was surprised to see it.
Well, I was just sitting here anyway. I thought to myself, we're all watching it, so I just popped on and hit a few buttons and came online. We took a dollar yen scalp on that, and we were sort of like 25 pips in profit. I sort of moved to break even and went out for the evening, but I got stopped out on the back of that. But yeah, I mean the FOMC was a bit of an odd one, really. I mean, there's three words that came out of the FOMC statement, all in one sentence, and it was tightening, appropriate, and soon. And for some reason, all the Dutch took hold of that and started selling the US dollar down.
Yeah.
So obviously the reason why they got themselves nervous and why we're seeing some dubs coming back into the US dollar and why the yields are coming lower is clearly because they mentioned that the soft data that's coming out of the US over the last couple of months or so, and they're sort of keenly watching that. Well, again, that to me is no big shock horror. We've always been data dependent. Yellen's never said anything but being data dependent, and but the markets have got nervous about it. And I think the other thing about that, to be honest, Jason, is if you look what's put the 2,000 points on the stock market, it's all obviously all to do with Trump and his fiscal stimulus. No, we're not actually seeing anything of that at the moment. Weak number is coming out of the US. Softer data is coming out. Fiscal plans that Trump's been talking about before the election. We're not seeing any signs of it. Dollar's just getting tired now. It's getting tired of all this rhetoric from Trump. And I think that's reflecting in the bond yields. Bond yields are coming off. And dollar is under pressure. Yep. So whether the hikes come out this year, I mean, I think June hike is still penciled in for 75%.
Mm-hmm.
September hike, I think, is now sort of back down at 60% on schedule for the two hikes, marginally. So there's nervousness in the market. Yeah. And I think there's definitely talk now that, unless we see some push through in the data, then it could only be one more hike for the rest of it, in which case, the dollar index could be back down at 94. I mean, we were trading 94 just before Trump got elected. Mm-hmm. It's not far off there now, to be honest. I mean, the level to the upside, 97.50, I think, could hold it. 97.50 to 96.50 is like a range I think we'll be in that for a while.
Hmm. Yeah, we were covering that in the Asian stream last night too, about did the bottom come in the DXY or not. We had that bottom put in at 96.70, and I basically I don't know if you saw that stream, probably not because
No,
you're doing how
no,
many streams a day now, but
yeah.
I have a channel between 97.37 and 96.70, and I just basically said, look, we're gonna range in here. If it goes up, you buy it. If it goes down, you sell it. I mean, it's a hard call right now. We're in a consolidation area, but we have the bottom of the Trump candle at 95.87 or so.
That's the
And
one. Yeah,
I think
yeah,
I
that's the
think it's
one.
going to go down. I think it's going to end up going down there. Maybe not right away, but that's where I think it's headed.
I think you're right, and I think it's certainly grinding there at the moment. We need to see something. We need to see some. We need to see some regulation pullback. We need to see some fiscal spending. We need to see something on the tax cuts. The tax cuts now. I saw House Speaker Ryan talking in the week.
Hmm.
About nothing's going to be sort of like put into action until another year. I mean, it's all just pushing the can down the line, and I think at some point, people are going to look for yield differentials elsewhere.
Hmm.
And if you look at some of it, like the euro, where it's sort of like it's moving ahead, ticking away nicely. Positive data coming out of Europe. Fiscal monetary normalization coming. Talks tapering, asset purchasing again. So tapering of the asset purchasing and unwinding of that. Then of course you look to play euro dollar. Euro dollar could be back up at 115 level as market states look for the yield differentials there in terms of that's definitely happening in Europe. It might not happen in the US. The other thing you look at is the Japanese yen. I mean, although the Japanese yen is really strong at the moment, there's certainly a flight or there's a move at the moment into less risk. So definitely seeing that.
Right.
Which is why the yen's put on a bid, which is why the stock market's coming back down, which is why gold's going up a little bit at the moment.
Hmm.
I don't know how long that's sustainable, to be honest, on the Japanese yen. It still has a very negative, negative yields there, and I think at some point, I know you're short euro yen,
Hmm.
and in fact I got stopped out on euro yen long overnight. I think it was a trade idea. I got stopped out on that one. Yeah, I got stopped out overnight, just a 0.25% risk, so not a big deal.
Hmm.
But that's why I don't have wonderful convictions over that type of trade at the moment, just because of the fundamentals in the yield differential. And if you look on the chart as well, it's also
sure.
in that uptrend. But yen's strong at the moment. I just don't know how long that can be really the strongest currency in the basket.
Yeah, I agree. I mean, we've been seeing the Canadian dollar start to strengthen up here as well as the New Zealand here in the last day, but the U.S. indices, been talking about this all week. Every day this week, it's been slightly positive. The Dow, the NASDAQ, the S&P here in the U.S., it's been just a little positive, little positive, little positive. It's just every day. It's just, I'm like, where is this? Now the futures are showing just a slightly negative opening today, but really this whole week has been pretty quiet as far as the U.S. stock market's concerned, especially surprising with the fall of crude and oil and the OPEC meetings and things. So I
think that's because the boss is away on a holiday or on a business trip
yeah.
around.
Right.
He's back in town next week, isn't he?
Yeah.
So he's back in Washington next week, and and then you've obviously got all the Russian Comey and all that about to start hitting the wires again as well. So
I know his son-in-law and all this other kind of sketchy stuff. One of the things that I was getting cleaned up this morning, because it's midday by you. What time is it by you now, Andrew? It's
coming up for 2 p.m.
2 p.m. So it's almost 8 a.m. here. I was getting cleaned up this morning and brushing my teeth and thinking, what's the big question I have for Andrew? And really what I wanted to get your take on, because you're so good at this. Now I'm putting you on the spot. Andrew, for everybody watching, Andrew always says, "Don't put me on the spot here," but he's so good. What's up with what's your take on the pound? I mean, the pound's been falling apart here. I mean, I got a feeling of it. Of course, we got Theresa May and we got different stuff going on with the Brexit and things, but the pound's really taken a beating here the last day or two. What's your take?
Well, I'm pleased you put me on the spot on something I can possibly have a view on.
I think you could handle it. You can handle it.
I can handle the pound because I live here, but yeah, I mean, basically the pound has had if you look at the volumes of what's been going on in liquidity in the pound over the last couple of weeks, or in fact even this week, there seems to be quite low volume in the pound crosses. And if you look at the cable, for example, you'll see some real big spikes on up to the upside, but each pushing through 130 on cable. But each time it pushes through, it doesn't make that new high. In fact, I got stopped out yesterday just before we had, or just on the GDP numbers that came out yesterday. negative GDP numbers. I was looking at it thinking, oh, that's good. We'll take some pips out of this one.
Mm-hmm.
There's a spike up. Obviously, someone hit a flat finger, but it moved the market, 40 points up. Mm-hmm. Took out my stop. I think it might have taken out your stop as well.
I wasn't gonna interrupt you, but I got stopped out. I think on the same thing. It was like 1.3010 or something, like by 5 pips.
We got stopped out, and that was on the GDP, which were negative numbers, but that was either a flat thing. Anyway, the point being is there's quite thin liquidity, and there was quite a big spike up, but significantly enough, above 130. Every spike through we've seen on that just comes into a big wall of resistance. Right. So I think, and that's why I was basically shorting cable, for pretty much all last week and this week. There's just big resistance in there at the moment. Mm-hmm. Unfortunately now, as luck would have it, I don't have a trading cable, and that's when we've just fallen off 150 points.
Mm-hmm.
But
same as me. I'm the same way. I don't have mine on either. I got stopped out on it with that wick, and it's the those darn wicks on the hourly chart. You got 3 wicks right in a row on a perfect descending trend line. It's frustrating,
Well, it is, but it's only frustrating when you look at it as a wick. But it could have been a big Mizubu candle with a momentum following up, and you could have been. So there's 2 schools of thoughts about having stops and not having stops.
Right.
One thing I do is I sleep easy, and I might go and sit in the garden now with a non-alcoholic cocktail, and I'm not worried about what's going on in the market because I have stops in place. So
sure.
So I always have stops, and sometimes you get caught out on these wicks, and sometimes you have a stop and it just misses it by a point, and then it goes goes back. Anyway, that's the thing. Anyway, about the pound. I mean, last weekend we had the Conservative Party. She's sort of like changed it now. They're the leading the government at the moment. We're going to the election in 2 weeks' time. Last weekend, the Conservative Party, which are looking for a bigger majority to ease the Brexit negotiations. They announced in the manifesto, and that saw a drop in opinion polls from 20% lead to 10% lead. So the market was a bit concerned about that on Monday, but not overly concerned. Then you had the Europeans basically saying they want $100 billion, 100 billion euros as the exit bill, and UK ministers threatened to pull out of that. And last night overnight we had another opinion poll coming out from YouGov, which puts the lead only at 5%, which is the smallest lead now that we've had in terms of Tories over Labour, the biggest opposition party, since Prime Minister May came in, 9 months ago or so. So that's that. So you've got the concern of the election risk. Now, I have been talking about that all week. The election risk, the market didn't seem to be looking at this election risk. But just taking the election risk out of the equation, you've also got in pound, a real softening of numbers. And I think, I'm a technical trader, Jason, but I also sit here watching and reading and understanding economics as well.
Right.
You got inflation growing in the UK around 2.7%, for example. You've got average earnings lagging massively behind, coming in around 2.1, I think, or something around that level. So average earnings are not keeping up with inflation. Household debt in the UK is at basically its lowest. Well, if you look at the savings to debt ratio, it's possibly the lowest it's been now for about 40 years. Now this does not bode well for economic growth,
right.
And I think that basically is going to pan out in the UK over the next 3 months or so as we start on the Brexit negotiations. And I think the market's now getting wind of it. So I am, as a fundamentalist, I know at the end of the day I will trade what I see on the charts. I won't trade my view because I'm not, I have an understanding, but I don't trade on the back of it.
Right.
Pound could be in for some negative trading, negative bias. And if I see that on the charts, I'll get on the back of it. But if I'm wrong and everything starts going off and average earnings starts kicking up, and then of course we play to the long side. But at the moment, pound is under pressure, right. And the Brexit negotiations, will only add fuel to this fire. And if you look at the euro against the pound, it's trading around the 80, just from memory, it's trading around 87 level, something like that. It's come back now, I thought, with the back of, but euro and pound have both come off. So what is euro pound at the moment? 87, is it?
Euro pound? 87.24. Mm-hmm. Okay,
so 87.24. So we've broken this level, 87.24, 87 handle. Every potential for this to start pushing up to 90 handle. So looking to play euro pound from the long side, I think is a real quite solid play. Not so confident about the dollar because the dollar's got its own concerns. Euro, pound, Brexit. Euro's got much more to benefit than, or a lot less to lose than the British pound at this moment in time. So any opportunities that I can get into buying long euro pound on the ascent to 90 would be a way I could play that one. That's why I'm looking at that. So.
Cool.
So that's my take on the British pound at the moment.
I like it. I put a little link in the chat too that just came out on Reuters from. It says sterling hits 3-week low. FTSE gains as conservative leads slumps, and it's talking about Theresa May and summarizing a lot of that stuff that I'm trying to figure out. We were covering the euro pound last night, and on the daily chart, I'm not going to pull my chart up right now, but the daily chart, there's a descending trend line that we actually broke. And the next level of resistance to the upside is the swing high that was put in on March 13th, right around 87.88. And, so we'll see, that's still, a good 60, 70 pips away from current price action. But from right now till there's really nothing stopping it to go up a little bit higher. Technically.
Yeah, at the moment, we had GDP numbers came out as well. Yesterday, that missed targets yesterday. So softer data as well. And, as we know, the markets react. These are risk elements. Election is risk. And Brexit. There's risk in the market. It's all this uncertainty that the markets find sometimes difficult to take on. Now, my bias, pound, long term. My trade for the beach. I still believe my beach trade's intact. 129 calls in against cable. Over the course of the next 12 months to 18 months, I think once we get negotiations going and everything, looks rosier. I mean, certainly in a couple of years' time. I mean, I think pound's going to be significantly higher. I think we'll do well out of Brexit. Now, that's why I did actually vote for Brexit. So my bias, I'm still confident that the UK, will pick itself up and get on with this. But just in the short term, next 3 months or so. There'll be nervousness in pound, so paying pound costs along that way. So that's my view on that. Yeah. So far as OPEC's concerned, that was a funny old one, wasn't it? I mean, OPEC with their, we've been talking about that for about 3 months, and of course it all heated up with the last couple of weeks ago, talking about the 9-month extension. Correct. Some the Algerians were talking about extending it out for the whole of 2018, which would have been an 18-month extension, if you like. Right. But the OPEC really failed to deliver on this. And I think they've just done exactly what the market had priced in. So this is a classic case of, on a chart, of buying the rumor, selling the fact. And that's where you're seeing the oil prices coming off. Oil prices were down like 6% yesterday. And not doing too much better today. It's just sort of like petering around. If you look at the move we had from 53 down to 43, that was like a 20% move in WTI. Right. And we're almost back down now in the middle of that range, and sure. I remember when oil prices start kicking up to 55. That's when all the US producers, all the shale producers, that's when all they start kicking in. So oil is going to be capped. The thing about oil and Canadian dollar, when oil prices are going up, Canadian dollar does really well. Canadian dollar follows it. When oil prices come off, Canadian dollar is more resilient. So don't think just because the oil prices are coming back down that that you should be filling your boots with short CAD trades. It's not necessarily the case. So do be mindful of that. The Canadian, in fact, the RBC announced this week. If you follow the news, they talking about the Bank of Canada. Canada has adjusted to lower oil price environment. We're back down from $100 a barrel. They've adjusted their economy for that, so which buoyed the Canadian dollar as well. Trump seems to have taken his pressure off, of course, on the Canadian on the NAFTA and what have you. So and there's some good stuff coming out of Canada as well.
You remember that NAFTA wick we had with Trump, and it went right down and way back up with the NAFTA craziness. I was going to say this surprised me, but nothing really surprised me with Trump at all anymore. We talked about the little video that's been going around where he pushed the other NATO member out. I forget which country that was, but pushed him out of the way. It's been going sort of viral around. So nothing really surprised me with the guy. But there was some headlines here just a few days ago that he announced that he wanted to sell half of all the U.S. oil reserves off after his meeting with Saudi Arabia, and then start drilling and fracking up in the Alaskan nature preserve. That's his plan. So I mean, what in the heck? So he's going to sell off half the reserve. I mean, there's reasons for it financially, but the stuff the guy does, I mean, he's so.
Well, yeah, I mean, this, no, yeah, I mean, it goes out on YouTube. This, so we've got to be a little bit careful about it. I mean,
Yeah, right.
but yeah, I mean, sometimes it is questionable, isn't it? But I don't think he's done himself any harm this week. In NATO. I mean, he's and around the world, he's looked really reasonably presidential. I mean, apart from his rant yesterday at the NATO conference when he started slagging down the rest of the Europe, just the members. I mean, he's been pretty much on script. Right. And he's looked reasonably presidential. And I'll tell you, everyone that voted for President Trump, last November, and they see him on this, and they see him talking down the Germans and talking about and slating them for their, for their German, for the car manufacturing and how he's going to stomp out the, this imbalance of automobiles. Everyone that voted for Trump is going to be saying, "Yeah, go on, man, you stick," and they would vote for him again. So he's not, he's not losing his core support in turn at all. I mean, we'll see if the word impeach becomes a big Twitter word as it was last week.
Right. I know. I think the big thing with Trump, and I don't think anybody will disagree. Maybe some people will, but I don't think most people would disagree. If he would just go on script and do what he's supposed to do and stay off Twitter with the crazy stuff, everybody respect him a lot more. But we'll see. I mean, he's traveling around the world now. This is the first time he's been out of the country this last week or so, traveling around, going to the the big meetings, and I think he's at the weekend meeting with the G7 and things now. I keep an eye. He said 3 hours ago or so, getting ready to engage G7 leaders on many issues, including economic growth, terrorism, security. Okay, so that kind of stuff is respectful. And the more respect he gets, the better.
Keep on track with it, yeah.
Yeah, absolutely. I mean, I had somebody ask me, I think it was 2 days ago during the Asian review, what happened with the DXY and the US dollar? And basically, the biggest reason it unfolded this last week was the whole talk of what Trump's doing, and all the stuff with the Russians and, possible impeachment and that kind of stuff. So
yeah, that's why we've had the big fall off, and that's affected. I mean, look at bond yields. Bond yields, were up at 250, 2.5. Before all that kicked off, they're now trading they came back down to 220, 2.2, I should say. So that's affected in the bond yields. We've had you've had the stock markets up, gold's up. This is sorry, not the stock market. You've had the gold up. You've had the Japanese yen coming back. The risk is being sort of taken away from the market, and that's why bond prices have gone up, yields come down, dollar comes down. So it's all basically all related in the same pipe. One thing I wanted to look at in terms of looking at the charts is the Australian dollar. Now, this Australian dollar is sort of like flying under the radar of a few at the moment. I had a really nice profitable trade which has been running for pretty much all of the week. It was the long Euro Aussie. Now, thankfully, overnight I took profits in the Euro Oz. But I still like the trade, and I placed another trade idea out a few hours ago, Euro Oz, and that unfortunately got stopped out to the downside. But the main reason why that got stopped out is the Euro's been pulling back this morning. Nothing more than just clearly profit taking, which is very healthy in these formation of longer term trends. Right, but the point being is the Australian weakness. Australia does remain to be a weak currency. The global commodity prices are still under pressure. China's had a downgrade from Moody this week. I don't know if you saw that. So there's a Moody downgrade from AAA to AA3 or something, whatever it is. I don't understand how those downgrades so they've had a downgrade, which affects whatever. So Australia, they've got, and in fact the RBA announced or mentioned in their statement last couple of weeks ago, wasn't it, about their concern for global commodity prices. Commodity prices are definitely subdued. You've got big household debt in Australia as well. Any likelihood of a move to interest rates to the upside in Australia is just way down the line. Certainly not for this year. Maybe not for another 12 months before they start looking at that. Australian dollar currency, that's what I'd like to say. Any reason why that blips up is a reason to start selling into it. So buying pairs against the Australian dollar potentially is another way forward. So British pound weak, Australian weak. Look for pairs against that to trade to the long side. So
yeah, I like that idea as well. I think the U.S. dollar in my humble opinion, is probably the hardest one to predict for me right now. We're coming up on that channel, that 97.37 right now, where we're looking to maybe break out to the upside. But I put a trade idea out last night, pending short Aussie dollar at 74.40, and it got triggered. It got about 15 to 17 pips profit. Then it went down -20, and now it's, I think it's down about 8 pips right now. So I'm definitely favored the same way that you're thinking. Weak Aussie. The only thing that the Aussie's been really beating here in the short term, the last few hours, has been the euro. But again, the euro quite overextended, like you said, profit taking. I'm happy for my euro yen because of that. Yeah, because it's working. So we'll play the game as it.
I've got a trade idea sitting there pending in the trade idea. It's in my streaming account as well. It's a short Aussie yen pending. I haven't seen it. What's Aussie yen trading at the moment?
I don't trade Aussie, and I don't have it up actually. I'm not sure. 82.80
is my level. Aussie yen is trading. I must be in that now then. So I'm short Aussie yen now. 82.80. The trade idea.
Got it. There was a question on here. I'm not sure. It was from Armin. It said, Andrew and Jason, what do you think of Great British Pound in a scenario Labour wins? So I'm not sure what that means. Maybe you do.
It basically means if Labour in the election coming up, there's two: the Conservative Party and the Labour Party. You have the Republican Party, which is the Conservative Party or the right, and you've got the Democrats being the left-wing party. So the election coming up, he's talking about. The question is, if Labour win the election, what is in it for? Where do we see pound? Well, I mean, it's just in terms of uncertainty, it's going to be lower. It will be considerably lower. Whether that's justified or not, we don't know. But as you can just tell by the opinion polls over the weekend and this week, if Labour get in, it's knocked 150 points off the dollar CAD today, dollar cable today. This could be back down to 120 level certainly if Labour were to get in, because the party. I know this goes out on YouTube, so please don't slate me if you're a staunch Labour supporter. But Labour are in such disarray. They can't even form a shadow cabinet at the moment. Most of their party, have been trying to rebel against their leader at the moment. This leader is potentially the next prime minister. He's got some very, very left-wing views, and the financial markets are not going to like it. It's as simple as that. The financial markets will react very negatively to the left-wing Labour getting in. The left-wing, historically, they spend a lot of money. They go into debt. They're going to be. It's going to affect the credit rating. It's going to mean that the yields are going to go up. It's going to mean our potential borrow is going to go up. Going to be more penal. I mean, quite honestly, it's going to really shake up the financial markets if Labour get in.
What are the odds now? Because I'm not in Great Britain like you are. What are the odds? Is Labour? What's the percentage?
Well, the odds. I mean, the odds. It's very unlikely they will get a majority in the House in government. Very, very unlikely at the moment.
Okay.
The reason why Prime Minister May called this election was because they were 20 points ahead in the polls, and they want to have and they wanted to get a stronger majority in the government. At the moment, they only have 15 majority or so. They want to increase that so they can get more of their policies through in their Brexit negotiations and not be wagged by the you don't want the tail wagging the dog, as it were. Yeah. So they want to get more of a majority.
Right. Got it.
So the odds basically have gone from 20% lead over Monday after the manifesto is down to 10% lead. The lead has now been cut to 5%. I don't know how that equates into odds. It's very unlikely. This could be a knee-jerk reaction to the dreadful atrocities that happen in Manchester as well. I mean, it's these when you do opinion polls after something so despicable as that, it affects people's emotions and they want to fight out against the current, the current setup. So that affects people's, comments when they get polled. Yeah. So I personally wouldn't be reading too much into this one opinion poll. The Bloomberg poll still puts the Tories at like 12-15%, something like that, I think. But the odds are unlikely that they'll get a majority or even close to. Okay. But it will upset the financial markets if they did, I can assure you. That won't be a flash crash. That will be sell up and get out of the UK.
Yeah, that much. I wanted to make sure we at least touch, because the whole title of this talk is a review preview. I see the DXY is breaking above now. That's pulling the euro down. My euro yen is coming right up on resistance. I'm sorry, support at 124.10. So holding my breath on that one just a little bit to see what happens with it. Next week though, we have the Memorial Day holiday, right? We got the bank holidays in China. Other than that, we have non-farm payroll, of course. You know, remember that, the first Friday of the month, June 2nd. But the week of news next week is pretty quiet. I mean, it really isn't anything is going to shake anything up until the end of the week. So if you're like me,
week,
I like it when there's less news.
Yeah. Well, that's one of those ones, isn't it? I mean, non-farm payroll.
Yeah.
Of all non-farm payrolls, that's got to be the mother of all non-farm payrolls in terms of. And unfortunately, the market is going to be talking about it all week. Every stream will come on. We'll say we've got non-farm payroll at the end of the week.
You're right. I know. Don't trade because we got non-farm. You know, don't you? Yeah.
So once you switch off your screens and just no. But anyway, non-farm payroll is the big mother of all next week, and sort of tends to, when you have a long weekend like Memorial Day, sort of like everyone goes away for the long weekend. Getting back on it's like normally a subdued Tuesday as well. So in for a quiet week until the end of the non-farm payroll. Until the end of the week. Quite honestly, if you're not in trades now, now we've had this big number out of the way, which sort of like seemed to go pretty unnoticed. GDP numbers in the US didn't come out. It came out slightly better than the market was looking for. Came at 2.2 versus expected 2.3. So pretty much durable goods down 0.4 as opposed to expected up 0.5. So durable goods numbers were pretty weak, actually. I haven't seen any revisions.
There is a revision on the durable goods to 0.00 previous.
PC prices in line. So, I mean, they're pretty mixed numbers. It really is going to be now, I think, a run into the weekend this evening, this afternoon, depending where you are in the world. I know you're just starting there in the US, but I'm not expecting too much market now. When you see trends, what we're seeing at the moment with the euro, the yen coming down to your buyer, which is good. That doesn't often shake around. That's either going to just run out of steam or carry on.
Right.
That's not going to suddenly turn around today into ahead of this weekend, I don't think. So if you're on that trade, it's supposed to be the right trade to sit and just maybe go out and don't look at the screens and just let it grind lower.
Yeah.
I don't think it's going to snap back because that is just basically unwinding of long positions in the euro, quite frankly. Euro yen has been the other way around pretty much all week, and that's just an unwinding, so there's no real reason for that to snap back. So it's actually the right trade to be in for the rest of the few hours of the trading session.
Yeah. Here's something else I wanted to ask you, Andrew, and again, put you on the spot as it's happening in real time. One of the things that sort of surprised me, and it's not anything that's out of the norm, but how much it's happened. And you talked about this, I think, a couple months ago or so. But like today, we have the DXY, the dollar's finally catching a little bit here, right? It's getting right up at that level, peeking through. But then we have gold and silver pushing up to new highs. And usually, not always, but most of the time, those two are inversed. I mean, silver's at 1733 now. Gold's at 1266. I mean, what's your opinion on there to share with people when the dollar gets strong?
I think this is this is reflecting, as far as I can see, in this is pure risk sentiment.
Risk off, yeah.
Risk off, yeah. So risk sentiment, risk coming off the market. So money moving into yen.
Right.
I mean, we had some minor inflation numbers out in Japan overnight. Money's moving into the yen. These are it's just risk coming off the market. I mean, look at the stock market. It's the stock market. It's sort of like grinding highs, not pushing into the weekend. I think it's very likely that you'll see the stock market come off later. This is pure, I think, just risk coming out of the market.
It's just interesting how often, for all the the 10 plus years I've been watching Forex, how often in this last 3 months or so, basically since Trump came in, right? How often we've seen the inverse relationship between the dollar and the price of silver and gold. It's really been backwards a lot, hasn't it? I mean, you talked about this a lot.
I mean, it's not a gimme. It's not guaranteed that they work inversely. They do deviate. I mean, it's more of a risk thing when they do start deviating. Right. Sometimes it's unexplainable. I'm just looking at the bond yields at the moment.
My silver trade, I wish I was still in. That was one of my best trades so far this year, and it had that big pullback after it bounced, and that was a time to take profits. But silver and gold pushing to new highs, And I like to see that, because when you're seeing those rise and you're seeing
Yeah.
the yen strengthen up a little bit, it's a good time. I put a note in the chat room last night right after my stream. Shorting the yen pairs looks great, and then they just sort of unfolded. It was just perfect timing. So I'm happy with that. I mean, the week here on my own trades has turned out pretty darn good. All the trades have been live. Like yourself, we tried to turn up the trade ideas a little bit this week. I think it's worth telling everybody about that. It's frustrating to come and take a trade when I'm not in front of my computer, and then post it as a trade idea when I'm 40 pips in profit already. I don't like doing that, because people say, well, why didn't you tell me before? So I've had multiple messages this last week. Please post all your trade ideas. Post as much as you can. But then you're going to get more losers with winners too. So I was always trying to post the premium stuff. Yeah. And I've had, 3 or 4 weeks, I think, when I didn't have a losing trade idea. And now I'm trying to turn up the volume a little bit. And I think you're doing the same thing.
Yeah, we are. But I mean, I said to someone today in the private thing, I've been trading for 30 years. I've only been on Forex signals for 6 months. I don't. Everything I do in the world, I don't place on the trade idea. I place the trade idea because I think it's good for the room to see the trade idea.
Exactly.
And I clearly think it's going to be a profitable trade.
Right.
But I might be, but I might be in and out of the market, 30 times a day on other stuff. Mm-hmm. I don't trade 30 times a day. That's wrong. I've done that for a long time. But if I'm in and out of the market 10 times a day, I'm not going to place 10 trade ideas. Right. Because I might have 5 losing trades out of those 10 trade ideas, right. And if people are taking those 5, and then you see some, then of course I take a trade idea because I generally believe that trade idea is going to work. Right. I feel strongly about that, and I also like the explanation of why I'm placing that trade. Right. Now people can follow them, and of course I'm not placing a trade idea to be because I think it's going wrong. I mean, I love it when my trade ideas go right. Most of them do go right. I only post the ones that I feel confident about. But I wouldn't say anyone should be following each and every trade idea as a signal. I mean, trading is much more about buying, picking an entry of buy and then picking an entry of sell. I mean, it's all to do with a lot more about risk management and money control and psychology and so forth. Right. So the trade idea is get to feel how we're thinking, how we place trades. Right. I place a trade idea which basically replicates everything that I do in my trading strategy. Mm-hmm.
I know when I came on with Forex Signals, just about the same time as you last early winter, I think it was October, November. When I came on board, the whole point of Forex Signals and what we have is education, trader education. And when you look at the name Forex Signals and you Google search it and it comes up, there's a lot of signal services out there, and that's what the name says. But the whole point of the trade ideas, in my opinion, is to teach the reasons why we take them. And go from there, put the risk to reward on there and that kind of thing. So, we don't have any services.
But people can follow them, and the good thing about them is that people can ask questions on them as well.
That's right.
Right. Because, in fact, I encourage anyone, whether you're using forexsignals.com or anywhere in the world, if you want to, be, trading as a full-time profession at some point in your life, if you're not doing it already at the moment, then you need to be able to understand what you're doing. I mean, there's no one on the planet, I can tell you, there's no one on the planet now that you can follow and give up your day job with. And if you did find someone that you can give up your day job with, what happens if that guy gets the flu that week or it doesn't stop trading? Then your whole business is out the window. So you never want to rely on pure signals anyway. You want to be able to understand what's going on behind the scenes, and that's what trade ideas are. Right. You can follow them, hopefully grab a few pips out of them. I think if you follow mine, you will, and Jason, yours as well, Jason. But it's the learning thing behind them. I mean, as well. I think. And I'm
going to be really honest. I mean, the hardest part for me working with Forex Signals, just my own personal thing, is there's a lot of people that want just the signals. They want to know buy here, where's the stop, where's the profit target, where's the next trade, where's the and they don't want to learn. For me, that's a little harder because, like you said, that's great, but you don't learn from that.
We've got to learn. That's the thing. I mean, you've got to learn. Even this type of stream today. I mean, it might be a bit of economics coming in here as well. But it's basically you get to understand where we are thinking in terms of our bias and what the thought process is. I mean, I've told you, about what I think about the euro and about the British pound and why I think that's it's going to hit the 90 target before it hits the 80, 84 target. And you're learning from it, and that's why hopefully you're tuning in today.
Yeah. A couple of people in the chat room, I apologize. Usually when Andrew and I go on our little rants, I don't watch the chat quite as closely. But a few people said they'd rather see us post the more confident trades and not post the ones just to have more. So less is more, and I think so too. Yeah.
Yeah,
So
well, I don't. I'm not. I understand. I mean, I've got. I think I've got over 500 people that they get some email out to when I post a trade idea. So,
right.
I don't post a trade idea to show face. I mean,
Right.
I post a trade idea because I generally believe in that trade, and I put my own money on that trade. I put
Right.
real money on that trade.
Right.
I'm not doing it to fill in the numbers.
Right.
Um,
Since the start of this year, if I look back at because I keep a pretty detailed trade journal, and that's one of my most important things I try to teach people who are newer. The trade journals are so boring and people don't like them, but they really do help you to find patterns that you might not notice. But the number one thing is, studying. And when I look back at my trade ideas or my trade journal, I probably have 2, maybe 3 really good trades each week where everything meets my criteria. It's like a 9 out of 10 and it feels good. That's sort of average. So that's the amount of trade ideas, that I generally would put up there as maybe 2. This week we've been trying to get out a few more, but like you said, if you follow us, if you click on our name and click follow whoever's in the room, you'll get an email every single time they post a trade idea. So I follow you, Andrew, and it's sort of cool because I wake up and it says Andrew Lockwood is going long and it shows the chart and all that stuff. But we have to remember, people are trading this a lot of times with real money too. So I'm always sort of leery just to post them, right? You want to post the good stuff.
I only post the good stuff. I only post something I feel confident about.
Anyway, you get the idea. Is there anything you wanted to cover before we sign off here for the week or idle back a little bit, Andrew?
No, I think that's basically what I was saying. Just to reiterate what we're saying about about gold and about risk off at the moment. If you look at bond yields, bond yields have come back down from 230 now to down to 224. That basically means, again, it just reiterates what I was saying in terms of where the risk of the money is. When there's concerns and risk, you go into the safer assets. So you go into gold. You go into the bond market, and of course, if you buy bonds and the yields come down, which is why the dollar's coming down. So the bond markets are reflecting exactly what we're seeing in the other safe haven entities, i.e., gold and yen as well.
Yeah.
So
I just saw a live squawk from Reuters that came through. It says Bank of Russia says oil likely to return to $40 in the medium term. So that would be, eventually, like a lot of traders said, you can only go so low in crude, and that's the cost to produce it. I don't know what you've heard on that, but the cost to produce oil, what is it, $25 a barrel roughly? Is that about the cost?
Well, it depends where. Yeah, it's down at that level. But of course, if you're up at the, obviously, the US are increasing their production. I think they've had the last 17 weeks they've increased the number of oil rigs, or 18 weeks now, have gone out. So, but obviously, a lot of the shale production needs higher oil prices. Right. So as higher oil prices come up, the more of that comes online. Right. But yeah, I mean, I think they're right. I mean, $40 sort of is almost a normalization. I mean,
right. Eventually, buying oil will be the trade of the year. If it gets down around that. So, and I don't want to get off topic because this is a super exciting thing right now. But buying oil if it gets down there might be the next Bitcoin trade. That kind
of
thing.
It has to be. I mean, it's like that is a pure commodity that is used. It's not just something like that's fathomable. If oil prices get back down to $25, which means the cost of production is far outweighing the cost of resale. But of course, production is going to slow, and if production's slow, there's going to be a shortage. And if there's going to be a shortage, up go prices. So it's just basic economics. So at some point, oil is going to be a screaming buy because it's going to become a rarer commodity than it is at the moment. Right. Now, it's all very well. I don't want to go into an energy talk here, but OPEC can decide where they want to push oil prices to. But at the end of the day, the market forces are going to decide where the oil prices are going to be. Right. You have a big cartel of people saying, let's get oil prices up again, which hurts the consumer, of course, but also aids them for their production because they need to make sure they get oil at the right price so they can keep producing. Sure. It's not just a self-fulfilling thing. But at the end of the day, supply and demand determines where oil prices will go. And as you get back down to 25, supply diminishes and demand is still there. Right. Well, it's still growing, although it's growing at a lesser rate now. But if you see the economies, if Trump gets his 3% and euro continues to grow, China's sort of stuck in around 5%. It's going to have a normalization at some point. $40 maybe is the right price.
Right. Right. I don't personally see it going down all the way, especially below 40. But if it does, I'd be thinking about getting some longer term, buys to the upside on that.
Yeah.
And as far as holding a commodity like crude, I just advise you to check with your broker to see what the swaps are and that kind of thing, because sometimes it's not as simple as just buy some and then try to sell it in a few months, because you get this cost every single day. So that's about all I have for today, Andrew.
Yep, I'm done.
Okay, then. Look at that. Look at that. We can just say, hey, that's enough.
Well, I'm back on. I'm back on this evening for the
Right.
for the London market wrap, and I'm looking out the my office windows here. It's every windows are open, and
Yeah.
it's blistering hot sunshine here in London.
Nice.
And
yeah, I see the shorts on. That's sort of nice. I don't get to see you with the shorts on very often.
oh yeah,
Yeah, nice.
Well,
All
I
right.
should have covered that.
Well, I guess we'll sign off then for today. You'll be back on later on, and I'll see you all next week. Still iffy on Monday. We're going to do a stream on Monday or not. We'll have to see, but otherwise we'll be on the rest of the normal schedule. I put my schedule on there for the next couple of weeks. I think yours is on for the next week or two as well, if you want to see it. Is Tony back next week? I don't know.
So he's back next week. I mean, I know I did ask. He's back next week. If I can just see on the chat room there, you've got that little icon where you can do a thumbs up, thumbs down. You don't have to say anything. If you can just put a thumbs up if you're going to be trading on Monday and a thumbs down, just so I can get a bit of a picture of who's going to be at their screens on Monday and who's going to be not at their screens on Monday. I'm not going to necessarily determine. I'm scheduled to stream, but but I'd like to know who I'm streaming to. So thumbs up if you're going to be on work on Monday. Thumbs down if you're not going to be trading on Monday.
All right, cool. Have a good weekend, everybody, and Andrew will be back on, of course, in a little bit. I'll see you then.
Good luck.
Thanks.